What is going on, traders? Welcome back to the Traveling Trader, your only source for market and trading analysis, or should be your only source. Go ahead and hit that thumbs up if you get anything out of this video, and subscribe to the channel. A lot of you watch but aren't subscribed. Go ahead and subscribe to the channel. So while the S&P futures hit 3,009, we're above $3,000 today. But the point of this video is I wanted to talk about what stocks and options to buy for June 2020. What should be your stocks and options strategy for June 2020? So the strategy here, part of it is really predicated on the markets either getting rejected from this level that it was at or breaking through to eventually catch all-time highs. And I was saying in my videos last week that if we did break this 200 moving average and we closed above it, then I mean, you can't really deny the signs that we are on another bull rally. Now, this is likely due to the fact that Novavax, the company, one of the companies that's producing a vaccine or trying to produce a vaccine, they started human trials for the coronavirus vaccine. This just came out today, and that is why the futures are up. So I believe it's one of the first, maybe the first major company to come out with to start human trials. Not too sure on that, but that news is definitely what's driving the market here. However, I don't think if we do close above the 200 moving average, I don't think we'll, shoot to back to these all-time highs or pre-crash highs again that quick. I do think we'll see some resistance here, some natural resistance here, potentially a retest of the 200 moving average as support, doing a support resistance flip. Anyway, let us get back into the strategy here. So initially, the first thing that I was looking to do in June is start taking profit on non-blue chips and compromised sectors if markets did end up getting rejected. Rejectee. That's not really a word, is it? Okay, I missed a D here. If markets did end up getting rejected. Now, as you see here, based on the futures, it doesn't look like the markets are going to get rejected, at least not at this level. And obviously, futures are not a perfect indication of what happens during the trading day. So we could very well get rejected throughout the day. Who knows? But if we do get rejected here, I will start looking to offload things in compromised sectors, because there was a chance if we don't close above the 200 MA, really the other scenario that's the most plausible, that makes the most sense, is we do get a decline, a rejection and a decline, potentially to the 50 moving average, maybe to this trading cluster that we see right here. So based on what's happening with the futures, I'm definitely not looking to sell just yet. And most of these things I will be setting stop limits for anyway, so I won't be manually selling them. But, things that are in compromised markets, like Jets at one point was seeing sideways trading here. So if we did hit $15 or above, I was going to look to start taking profits on Jets, especially if the market here got rejected and was declining. And I just want to say that I send out all these moves, my portfolio, my stocks, my options plays, my crypto plays. I send them all out in the trade alerts. Sign up if you want access to that. Link is in the description below. It'll cost you less than a cup of coffee a week. But if any of you guys are in non-blue chips or battered sectors, or even something like SLV, which is the silver ETF, this is one that we are up currently 32% on. Any of the battered sectors or non-blue chips that look like they were overextended. However, for now, based on what the futures are doing, like I said, I'm just going to remain put and see how it plays out for June. They said sell in May and go away. Well, luckily we don't listen to the rest of the market. All right, let's go back to our checklist. Keep playing short-term hype. So this includes Novavax, which I had on this list before that news came out, funny enough. But Novavax, work from home stocks or stay at home stocks, right? So like the Zooms, Pelotons, etc. And then focus on the China tensions. There's a few opportunities here that could be really lucrative, and I'll talk about this section right now. So I'm sure Novavax will be up like crazy pre-market, but it did test the 9 EMA here, this white line, and I was thinking of buying it after it started retracing and cooling off a bit, testing this 9 EMA, which is an EMA that it kind of stuck to during this whole rally. However, now the price will likely be too expensive and the option premiums will be too much for me to entertain an entry into Novavax here. It really depends. We'll see what happens. I was intending on buying this pre-market because of that retest, and then that news came out. So Sometimes that is how the game goes, guys. However, we do have what's called sympathy plays. So sympathy plays are basically when other companies in the sector ride the coattails of a company or a specific stock that's rallying due to some news or some earnings play. So we do have Gilead, and Gilead is one that I bought at the test of the 100 moving average. If you notice, Gilead looks like a heart rate monitor. I've made that comment before. Even though I think they're officially out of the vaccine game, they're still a hype stock during this pandemic. And this is a pretty low risk entry here at the 100 MA to see if there's still a swing trade in effect. And my plan is to sell it at $80 or above. Another stock, it's actually a penny stock that's in the same sector, is Predictive Oncology. This one we swung trade last week, but like I said, it's a penny stock. It's $1.49, and there's just a lot of opportunity here for swings. I'll be sending this out in the trade alerts, but we'll be looking at profit at around $1.90 or above. Blue is a company that we made, I think last week we made 12 or 13% on, but Bluebird Bio, it's not in exactly the same industry. This is in the gene editing industry, so like CRISPR, but they are looking to leverage the hype of the pandemic by, potentially in the future, being able to address it through gene editing as opposed to a vaccine, like literally pluck out the gene or the elements of the gene. I don't know. I'm not a goddamn scientist, but pluck out the elements of the gene that might be affected by certain viruses, or even being able to modify the virus itself. But it looks like we're currently at the 100 MA. Hopefully tomorrow, we'll see if we can ride a sympathy from Novavax and break the 100 MA. But I also have this as a long-term hold. If you look at Blue, I mean, the profit potential is just insane. This not that long ago was, over $240, and it tends to ride in these cycles, right? It looks like a kind of like a sine wave. So I would definitely hold Blue for the long term here. All right, work from home stocks or stay at home stocks. We'll take a look at Peloton. Obviously, this one is making a lot of news, especially since the pandemic. I think they saw their best sales ever. That's no surprise. However, in the surveys of buyers, they said 30 to 50% of the buyers said that they never intended to buy one, and the only reason they bought one is because of the pandemic and nobody can go to the gym. And a lot of people don't intend to subscribe to their courses past the 3 months. Also, when gyms open up, I don't know how receptive people will be to, stay at home workouts if they're just dying to go work out at the gym. If you look at the smart money index for Peloton, it does look like it's kind of declining, meaning the smart money is potentially getting ready to exit here. You see the MACD curling downward, but it is forming a bullish pennant as you see here. I'll draw it out for you. So kind of conflicting signals between the pattern itself and what's going on in the oscillators. On this one, I'll wait to see how it breaks out of this pennant and then play that. I might do an iron condor on Peloton, as if it doesn't decline heavily or doesn't see a rally due to a lot of reopenings, then there is potentially thought that it might trade sideways, and that's perfect for iron condor. So if it trades in a similar pattern to what it saw before the pandemic, then iron condors are perfect for that. And we'll get to iron condors in a second, because this is definitely a big part of my strategy on low volatility blue chips. An iron condor is an option strategy for those of you that don't know. And basically, you're just trying to leverage a stock that's going to stay within a range. You don't really want it to go high or low. You just want it to stay within a range, and you get to keep the premium if it does stay within that range. All right, let's go back to the work from home stocks or stay at home stocks. Zoom. This is one that I'm looking definitely to short by way of options. So you see the smart money index, people taking profits on Zoom. It is hitting a resistance level here. And, the fact that the economy is opening up, workplaces are opening up, there might be less need for Zoom. I see a retest of at least the 50 MA as it continually does. So in the short term, I might set up actually, you know what? Let's look at the volatility for Zoom. If you look at Zoom, actually, it's one of the top IV rank. This is implied volatility rank percentage in terms of options. So it's currently trading at 60. So its implied volatility measure right now is higher than 60% of the normal time. So above average for sure. And if we can get good premiums, I'll look to be potentially either, if we're going to get good premiums, I'll definitely be selling a call spread on Zoom here. Otherwise, I'll be buying a put spread on Zoom. It really depends on the premium. So looking at this right now, if we do the 170, 180, And this is Tastyworks, by the way. So this is one of my favorite options platforms now. So 171.80, not bad. I mean, it's what you would expect for a 60th percentile IV rank. So it's somewhere in the middle, because the max value that this spread can be is $10, right? So $5.50, you're paying about half, and you get a chance to double your money if it's below 170. So I assume that the premiums on the call side aren't that great, but I'm definitely looking for Zoom to potentially see some resistance here and test this 50 moving average. And after that, I mean, at the 50 moving average, I'll definitely be looking to pick up the actual stock. All right, let's move over to DocuSign. This is absolutely insane. I generally don't touch stocks like this that are trading at all-time highs without any sort of resistance, any knowledge of what level it could see some resistance or support at. And it's just a parabolic rally. I'll wait for it to retest maybe the 21 EMA and see how it reacts to that, or even the 50 MA, but I generally don't try to short into resistance or FOMO buy something like this. Teladoc is another stay-at-home stock. It'll be interesting to see if it finds support at the 50 moving average again. You see the smart money moving out of Teladoc, at least in the short term, and you see the MACD declining. I wonder if the economy start opening back up and we also have a vaccine, or at least vaccine that's in human trials. If we'll see a breakdown of this, if we start to see a breakdown of the 50 moving average, then I might short Teladoc further. Who knows? We'll see. I think that the big test here is for these stay-at-home stocks to see how they react to the stock market, assuming that the stock market stays at these new highs, or at least recent new highs, right? It all really depends on what the market does, but watch the stay-at-home stocks. I mean, those I'll have a big eye on, because there might be some great short opportunities there. All right, next on the list, China tensions. This will be another one that will provide some lucrative opportunities potentially. We shorted JD, and I sent that out in the trade alerts, and as you can see, JD right now is looking to retest the 21 EMA, and Alibaba was down on Friday as well, and I saw that in the Asian markets it was down further. So we will likely retest the 200 MA on Alibaba. And for me, Alibaba is definitely a pickup at a discount here. So I will add some Alibaba as it falls to the 200 MA and a little below, as you see it likes to do generally, where it spikes. It does these valleys below the 200 moving average. Not making any major moves with Baba besides buying it, but JD, I'm still in the short. I wonder how that short will open once the market opens. However, as you potentially saw with Luckin Coffee, I mean, this one tanked. It's now at less than $2, and this was a stock that was at $50 a few months ago. But basically, there has been pressure on the Chinese companies to fairly report earnings and other numbers if they're going to be trading on U.S. exchanges. And the administration is putting some pressure on China to do that. And Luckin Coffee found that they were fudging their books a little bit, and that's why they were threatened with being delisted. Now, if you were in a Luckin Coffee short before this happened, oh my God, you made a ton of money, because the shares, there weren't any available shares to short once they reopened trading, or else everybody and their mom would have done it. So if you're able to get into what, I don't think they'll delist Alibaba, it's too big. I mean, that's like Amazon type big. But if you get into one of these companies like JD or Neo and you have a short, there could be some opportunity there if the US does in fact delist more companies like it did with Luckin Coffee. Now, the Asian markets in general did do well today because, they're starting to reopen. But there is a clash here definitely with the administration and the Chinese stocks. So it'll be interesting to see how it plays out. Like I said, Alibaba, I think, is safe. I will even consider buying it once it dips below the 200 moving average. But JD, I will likely keep my short open to at least the 50 moving average. That should net a good amount of money there. So keep an eye out on the China tensions. Also, the Chinese yuan. This is coming up on long-time support here. And if the Chinese yuan breaks below this, and obviously, China is known to manipulate its currency and devalue it. But if the Chinese yuan breaks lower here, then that could be good for these Chinese companies that are reporting earnings, because they report earnings in Chinese yuan. And, if they do any business in America or outside of China, they'll essentially be collecting those revenues in the euro or the dollar and then reporting earnings in the yuan, which will show them as inflated sales figures. So it is actually good for them when their currency is devalued. Also, it helps if there are any tariffs slapped on Chinese goods, because then it makes their goods cheaper for outsiders to buy. So watch the breakdown or bounce of the Chinese yuan here, and that could have an effect on the Chinese stocks as well. All right, next on the list, iron condors on low volatility blue chips. So iron condors, if you're not familiar with them, I'll show you a glimpse for what they look like. But an iron condor is essentially, say we were going to get into to Microsoft, right? So something that's pretty low volatility. If you look at its IV rank, it's 24 right now. So it's in the 24th percentile, meaning that its implied volatility right now is only higher than 24% of the time. So if you look at at what an iron condor looks like. So say you pick, a date that's 37, let's just say 37 days out. You go in here and you would short, because it's essentially a short position when you are selling an iron condor. So short iron condor, and you can obviously adjust the strike prices to make it less risky. But say you do the 170, 175, this is just an example. And by the way, I teach people how to trade options on one-on-ones. If you want to sign up for that, I don't have any available spots for May. May's almost done anyway, but for June, hit me up on June 1st. We do the one-on-ones over video or audio conference, and I teach people how to trade options, because I know that it could be a black hole and it's easy to get lost, but it is a very lucrative, or could be a very lucrative speculative instrument, much more than buying and selling stocks. So anyway, but this is what an iron condor looks like. If we go to the curve, you'll see that basically Microsoft has to stay between $170 and $190. And if it stays between 175 and 185, then essentially we collect $365. If it's anywhere out of that range here in the red, then we lose $135. This is actually a pretty good risk to reward here. And this is just with one options contract. Obviously, if you increase it to 10, which is the standard, then, if it stays within this range, you get to keep $3,650. And if you're out of the range, then you lose $1,350. But these types of plays on low volatility stocks. So you essentially want to go here and sort things by, IV rank, and check out some low volatility blue chips like Microsoft. You see Apple here, it's trading at its 18th. The IV rank percentage is at 18 percentile. Johnson & Johnson, 21st percentile. BRKB, which is Berkshire Hathaway's, at the 22nd percentile. Snap, you get the picture. But this is what an iron condor looks like. Wow, you even see Peloton in here, huh? I might do an iron condor on, stocks like AMD, Berkshire Hathaway, Apple, Microsoft, etc. And when you go in here and pick your iron condor, you don't have to pick it this tight. You can go to, say, a 90% chance of earning money on the trade, right? You see the 90% here for the call side, and then do the same thing for the put side. You get the picture. Obviously, the further out you set them, the less you get for your trade. So you will have to balance that risk reward. Anyway, so I'm looking to do that on Microsoft, AMD, maybe Peloton, Johnson & Johnson. Apple would be a good one as well. I see Apple coming up on all-time highs here again. This is just insane. That's actually Adobe, not Apple, but this is Apple coming up on all-time highs. And we own this stock. I actually bought it March 23rd, up 42% on Apple. So, it'll be a pretty low risk iron condor if we open up an iron condor that, trades or looks somewhere in this range. All right, last on the checklist, keep DCAing into blue chips and index funds. DCAing is short for dollar cost averaging. So DCAing into blue chips and index funds, that way, you get to add some of these. I personally think that some of these will never come down, even if the market does get rejected. So when you look at, when you look at Microsoft, for instance, the fact that it was trading at insanely trading at like $130. The fact that Amazon, what was it trading at during the worst of the crash? Amazon was trading at, $1,627. It's now at almost $1,000 higher. And we are currently up on Amazon 33%. And again, I sent all this out in the trade alerts when I made all these buys. So sign up if you want access to that. But I would keep dollar cost averaging into blue chips. Index funds too, like VU. So VU is just the S&P 500 index fund. However, dollar cost averaging means not blowing your whole budget on one price point, because if we do end up seeing a retracement, say on the S&P 500, or we see a retracement on Microsoft, you want to give yourself enough chance to buy an average. That's exactly what dollar cost averaging is, just averaging your entry price. And it usually entails some sort of buying on a schedule, like buying the same amount each time. And there are definitely some blue chips that are battered right now. So if you look at JP Morgan, this is one of my favorite stocks. At the moment, you could buy it at a major discount, and you will likely, not see any major gains in it for a while. But it is at a major discount right now. Berkshire Hathaway, Warren Buffett, our buddy, not doing too good with his investments during this pandemic. But still, Berkshire Hathaway trading at a very discounted rate here, almost near the pandemic rate. Google is one that I kept saying on the videos, and I kept saying in the trading group, that Google was one of the the major tech stocks that was undervalued, because Microsoft was up, Apple was up, Amazon was up, Facebook started climbing, but Google was still hanging around here for a very long time. And I ended up buying Google not the week of the stimulus, but I ended up buying Google around April 28th, and we're now up 14% on Google. But this one was undervalued for a long time, and it's sad that people didn't pick it up, but still below its all-time highs. And I think dollar cost averaging into Google is also sound trading. Tesla is one that I'll likely sell an iron condor on. This is the longest that Tesla spent in this range at this high of a price. Tesla usually, the times that it has gotten to this price has seen it tank thereafter. And then obviously we have the pandemic, so that can be an outlier. But this is the longest that Tesla has spent at this high of a price range, between 700 and around 850. So I might open an iron condor around this range here, as it looks like Tesla is looking for new price discovery here. And anytime Tesla or Shopify or Salesforce, for that matter, crash to the major moving averages, their Salesforce, anytime they crash to the major moving averages, I will look to dollar cost average into those companies. Anyway, a lot to talk about. I talked your guys' ear off. Again, leave a thumbs up if you get anything out of this video. Let me know if you're trading mostly stocks or options. Leave it in the comment section below. I will have a fun sweepstakes game that I'll play every month with the people in the comment section below, where I'll trade literally anything that you put in the comment section below. I'll open up a new account and I'll pick a comment at random and trade, and if I make money on that trade within a certain amount of time, I'll give it to the person that put that comment in. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.